I'm going to show you guys why you should incorporate time in your trading. There are a few reasons for it. The algorithm delivers price at a specific time of day, and there are three main sessions, or rather what ICT refer to as kill zones for this. So there's Asian kill zone, the London kill zone, and also the New York kill zone. And during these kill zones, volatility is considered the highest, which results in a larger and more expansive price movement. And during this time, price will seek to attack resting liquidities on either sides and also fill up any imbalances on its way. So to begin, we've got 3 days worth of data with each day showing the kill zone times. So look here, we've got Friday, Monday, and Tuesday, which was yesterday. Blue is Asia, pink is London, and green is New York. So for Asia kill zone, it runs from 8 to midnight, 8 p.m. to midnight. For London, it's 2 to 5 a.m. And for New York, it's 8:30 to 11 a.m. These are based on Eastern Standard Time and for indices only. As you can see, during these times, the candles are actually larger, the wicks are longer, and the bodies are fuller. So if we look at Asia here, Asia is considered the smallest price movement among the three kill zones, but still there's a lot of movement there. So during Asia, you see there's a little bit of consolidation here, expansion during the London kill zone, and look at New York. It's just this big bearish full body candle towards the downside. And we can see here as well movements during the Asia, London, and New York. And yesterday, movement was rather big during the Asia, London, and once again, a big one during New York session. The bodies of the candles are generally larger during these kill zones. It happens every day. What you want to do is just don't take my word for it. Spend the next few weeks, show up at least one of these times, tape read and observe. You'll find bigger price movements, and with that, better opportunities to trade. With that being said, a trade I took yesterday netted me just under $300, and time was a big factor for winning this trade. So I shared this trade's outlook and execution on my Twitter page yesterday. We've got a nice community of over 100 people so far. And basically, throughout the day, I actually shared the outlook saying that there could be potential retracement into the 1 hour fair value gaps before more downside towards the sell side liquidity here. So I'm still waiting. And during the London kill zone, we can see that price encroached into the 1 hour fair value gap, filling it before rejecting, traveling towards the downside. And during the New York session, price was fully delivered to the sell side liquidity here. So I'll show this on the charts for you guys. So we can see this eyeball here, which I've done on this little image, it's actually truncated on TradingView here. So price actually traveled towards the sell side liquidity. Now, how do I know that price is going to be traveling towards the downside, towards this sell side liquidity here? Because since last Friday, price actually rejected this 1 hour fair value gap, displaced towards the downside. And how do I know that price will be magnetized towards this zone? Look here, there was liquidity raided in the previous week, and there was a market structure shift right here. Furthermore, there is a OTE movement where price eventually traveled into the 61.8% mark, which is in a deep premium. So smart money will be looking to sell when prices are high. And look, big displacement towards the downside once more, creating a market structure shift, resulting in me looking for price to eventually raid the sell side liquidities here, and also eventually running towards the sell side liquidity here, and another one here. So I was monitoring this trade on the 1 minute time frame yesterday, and look, factoring it time. So I trade mainly between 9:30 and 11. I don't normally trade 8:30 because 8:30 is when a lot of the news events come out and a lot of volatility is in place. I rather wait for the dust to settle before actually taking my position. So we can see here, bearing in mind, make a mental note, guys, that we know now that the draw on liquidity is towards the downside here, like I've showed you before, right? 1 hour sell side liquidity, which is here where I put the eyeball. So let's go into the nitty gritty of the trade. So 8:30 open, I've got my indicator to help me visualize where the 8:30 open is. We can see price took out sell side liquidity here, a little bit of a Judas swing before traveling upwards. That's fine. not taking part of this trade, so that's okay. A lot of traders would think that price will eventually go upwards and get caught off guard. And you can see that price eventually traveled down here, taking more liquidity off the traders, stopping them out, traveling upwards again. Now, would you be participating in a trade for a bullish move? I wouldn't. Why? Because we've established the fact that draw on liquidity is towards this low here. So why would you look to trade towards the upside? This is just for the smart money to catch those retail traders off guard. So a huge displacement upwards. Impatient traders would think, okay, big displacement towards the upside. Let's run a ICT 2022 model. There's a fair value gap here. We'll put a trade in, OTE, move towards the upside. And little did they know, a lot of them will get stopped out when they place their stop loss around here. So I actually waited for the 9:30 open to happen, which, like I said, smart money took the traders out, went upwards, took all the traders that put their stop loss again, and ran down. Now, I wasn't able to participate in this trade because, look, there was literally no retracement. And I like to trade, and my trading plan tells me that I will only put in a trade at the retracement just to give me a better risk to reward ratio. So I was eyeing this on a 1 minute time frame, like I said before. I actually entered my trade around 10:04 here. And why did I enter a trade at 10:04? Because we've already established that price has reached sell side liquidity here. But not just that, we can also see that in this sell side liquidity, price actually broke through and it created a couple of fair value gaps, which price religiously respected. And also there was a market structure shift, I should say, market structure shift right here. So I took the trade about 10:04 with my stop loss just here at this first candle where the fair value gap was actually created here. Now, why did I put it here, not up here? Because if you look closely, liquidity was once again taken here. So price, to me, potentially is rushing down towards this 1 hour sell side liquidity, this line here. Long line, but you can't really see it because time frames are a little bit smaller, and that's what TradingView does, makes it a little bit smaller. So basically I took the trade here, and you can see price actually had other plans. It did not reach my target of this sell side liquidity here, but I took partials along the way, and I was actually stopped out around here, which I manually closed. So this is my trade in detail. Liquidity rate, market structure shift, took my trade here, took partials here, and eventually I trailed my stop loss and I closed off my full trade here, which netted me just under $300. So I hope this video was helpful to you guys in understanding how price can help you and determine how well your trades can be. Drop a comment, like and subscribe if you guys like this kind of content, and I'll catch you guys at the next one.